Chapter 8. The Company Audit 2. Special provision as regards accounts in the Companies Act 2013. Special requirements of company audit. Audit of share capital. Option on share capital. Shares transfer audit. Verification of issue of bonus shares. Audit of debentures. Audit of dividends. Specific provisions as regards accounts in the Companies Act 2013. Books of account. As per Section 212 of the Companies Act 2013, book and paper and book or paper include books of accounts, all sums of money received and expended by a company and matters in relation to which the receipts and expenditure take place, all sales and purchases of goods and services by the company, the assets and liabilities of the company, and the items of cost as may be prescribed under Section deeds, vouchers, writings, documents, minutes, registers maintained on paper or in electronic form. Maintenance of books of accounts, Section 128(1). Every company shall prepare and keep at its registered office books of account and other relevant books and papers and financial statements for every financial year which give a true and fair view of the state of affairs of the company, including that of its branch office or offices, if any. The company shall be in a position to explain the transactions effected both at the registered office and at its branches. Such books of accounts shall be kept on accrual basis and according to the double entry system of accounting. Place of maintenance of books of accounts, Section 128(1). The books of account and other relevant papers are required to be kept at the registered office of the company. Books of accounts can be kept at other place in India by passing a board resolution and file with the Registrar of Companies a notice in writing giving the full address of that place within 7 days of the board's decision. Electronic form of books of accounts. It is not necessary to keep these books in physical form. They may be kept in electronic mode. Proper books of accounts in relation to a branch of the company. Proper books of accounts relating to the transactions effected at the branch office in India or outside India shall be kept at that branch office. Proper summarized returns periodically must be sent by the branch office to the company at its registered office or the other place as decided by the Board of Directors. Persons who can inspect, Section 128(3) and 4. The books of accounts and other books and papers maintained by the company within India shall be open for inspection at the registered office of the company or at such other place in India by any director during business hours. The inspection in respect of any subsidiary of the company shall be done only by the person authorized in this behalf by a resolution of the Board of Directors. The officers and other employees of the company shall give to the person making such inspection all assistance in connection with the inspection which the company may reasonably be expected to give. Period of maintenance, Section 128(5). The books of accounts of every company together with the vouchers relevant to any entry in such books of accounts shall be kept in order by the company for a minimum period of 8 financial years immediately preceding a financial year. Where an investigation has been ordered in respect of the company, the central government may direct that the books of accounts may be kept for such longer period as it may deem fit. Persons responsible for maintenance and penalty, Section 128(6). The Managing Director, the whole-time Director in charge of finance, the Chief Financial Officer. any other person of a company charged by the board. If any of the persons mentioned above contravenes such provisions, they shall be punishable with imprisonment for a term which may extend to 1 year, or fine which shall not be less than 50,000 rupees, but which may extend to 5 lakh rupees, or both with imprisonment and fine. Financial Statements, Section 129. Meaning, as per Section 240 of the Companies Act 2013, financial statement in relation to a company includes a balance sheet as at the end of the financial year, a profit and loss account, or in the case of a company carrying on any activity not for profit, an income and expenditure account for the financial year, cash flow statement for the financial year, a statement of changes in equity if applicable, and any explanatory note annexed to or forming part of any document referred to in subclause 1, form of financial statements, section 129(1). Form of financial statements, section 129(1). The financial statements shall give a true and fair view of the state of affairs of the company or companies, comply with the accounting, shall be in the form of forms or as may be provided for different classes or classes of companies in Schedule 3. The above provisions relating to nature and content of financial statement shall not apply to following companies: insurance companies, banking companies, company engaged in the generation or supply of electricity, any other class of company for which a form of financial statement has been specified in or under the Act governing such class of company. Laying of financial statements, Section 129(2). At every AGM of a company, the BOD of the company shall lay before the company the financial statements for the financial year. Consolidated financial statements, Section 129(3) and 4. Where a company has one or more subsidiaries, it shall, in addition to its own financial statements, prepare a consolidated financial statement of the company and of all the subsidiaries in the same form and manner as that of its own. The consolidated financial statements shall also be laid before the AGM of the company along with the laying of its own financial statement. For the purposes of consolidated financial statements, subsidiary shall include associate company and joint venture. Deviations from accounting standards, Section 129(5). In case of any deviation from accounting standards, the company shall disclose the following: the deviation from the accounting standards, the reasons for such deviation, and the financial effects, if any, arising out of such deviation. Exemptions, Section 129(6). The central government may, on its own or on an application by a class or classes of companies, by notification, exempt any class or classes of companies from complying with any of the requirements of this section. Contravention, Section 129(7). In case of contravention of this section, the Managing Director, the whole-time director in charge of finance, the Chief Financial Officer, or any other person charged by the board with the duty of complying with the requirements of this section, in the absence of any of the officers mentioned above, all the directors shall be punishable with imprisonment for a term which may extend to 1 year, or fine which shall not be less than 50,000 rupees, but which may extend to 5 lakh rupees, or both with imprisonment and fine. Central government to prescribe accounting standards. As per Section 133 of the Companies Act 2013, accounting standards means the standards of accounting or any addendum thereto as recommended by the Institute of Chartered Accountants of India or ICAI, constituted under Section 3 of the Chartered Accountants Act 1949 as may be prescribed by the central government in consultation with and after examination of the recommendations made by the National Financial Reporting Authority constituted under Section 132 of the Companies Act 2013. Financial Statement, Board's Report, etc. Section 134. Authentication of Financial Statements. Section 134 (1), 2 and 7. The financial statements, including consolidated financial statement, if any, shall be approved by the Board of Directors before they are signed on behalf of the Board at least by the following: the chairperson of the company where he is authorized by the Board, or by 2 directors out of which one shall be managing director, and the chief executive officer if he is a director in the company, the chief financial officer wherever he is appointed, and the company secretary of the company wherever he is appointed. In the case of a one-person company, the financial statement shall be signed by only one director for submission to the auditor for his report thereon. The auditor's report shall be attached to every financial statement. A signed copy of every financial statement, including consolidated financial statement, if any, shall be issued, circulated or published along with a copy each of any notes annexed to or forming part of such financial statement, the auditor's report, and the board's report. Board's Report, Section 134, 3 and 4. There shall be attached to statements laid before a company in general meeting a report by its Board of Directors which shall include the extract of the annual return, number of meetings of the Board, Director's responsibility statement, a statement on declaration given by independent directors, company's policy on directors' appointment and remuneration, including criteria for determining qualifications, positive attributes, independence of a director, and other matter. Explanations or comments by the board on every qualification, reservation or adverse remark or disclaimer made by the auditor in his report, by the company secretary in practice in his secretarial audit report. Particulars of loans, guarantees or investments under Section 186, particulars of contracts or arrangements with related parties, the state of the company's affairs, the amounts, if any, which it proposes to carry to any reserves, the amount, if any, which it recommends should be paid by way of dividend, material changes and commitments, if any, affecting the financial position of the company, which have occurred between the end of the financial year of the company to which the financial statements relate and the date of the report. The conservation of energy technology absorption, foreign exchange earnings and outgo in such manner as prescribed under the Companies Accounts Rules 2014, which provides for conservation of energy, the steps taken or impact on conservation of energy, the steps taken by the company for utilizing alternate sources of energy, the capital investment on energy conservation equipment. Technology absorption, the efforts made towards technology absorption, the benefits derived like product improvement, cost reduction, product development, or import substitution. In case of imported technology, imported during the last 3 years, reckoned from the beginning of the financial year, the details of technology imported, the year of import, whether the technology been fully absorbed, whether the technology has been fully absorbed, if not fully absorbed, areas where absorption has not taken place, and the reasons thereof, the expenditure incurred on research and development. Foreign exchange earnings and outgo. The foreign exchange earned in terms of actual inflows during the year and the foreign exchange outgo during the year in terms of actual outflows. A statement indicating development and implementation of a risk management policy for the company, including identification therein of elements of risk. The details about the policy developed and implemented by the company on corporate social responsibility initiatives taken during the year. Every listed company and every other public company having a paid-up share capital of 25 crore rupees or more, calculated at the end of the preceding financial year, shall include a statement indicating the manner in which formal annual evaluation has been made by the board of its own performance and that of its committees and individual directors. The report of the board shall also contain the financial summary or highlights, the change in the nature of business, the details of directors or key managerial personnel who were appointed or have resigned during the year, the names of companies which have become or ceased to be its subsidiaries, joint ventures, or associate companies during the year, the details relating to deposits like accepted during the year, remained unpaid or unclaimed as at the end of the year, whether there has been any default in repayment of deposits or payment of interest thereon during the year, and if so, number of such cases and the total amount involved at the beginning of the year, maximum during the year, at the end of the year. The details of deposits which are not in compliance with the requirements of Chapter 5 of the Act, the details of significant and material orders passed by the regulators or courts or tribunals impacting the going concern status and company's operations in future, the details in respect of adequacy of internal financial controls with reference to the financial statement. Director's Responsibility Statement, Section 134(5). It shall state, applicable accounting standards had been followed along with proper explanation relating to material departures. The directors had selected such accounting policies and applied them consistently and made judgments and estimates that are reasonable and prudent so as to give a true and fair view of the state of affairs of the company at the end of the financial year and of the profit and loss of the company for that period. The directors had taken proper and sufficient care for the maintenance of adequate accounting records in accordance with the provisions of this Act for safeguarding the assets of the company and for preventing and detecting fraud and other irregularities. The directors had prepared the annual accounts on a going concern basis. The directors, in case of a listed company, had laid down internal financial controls to be followed by the company and that such internal financial controls are adequate and were operating effectively. The directors had devised proper systems to ensure compliance with the provisions of all applicable laws and that such systems were adequate and operating effectively. Signing of Board's Report, Section 134(6). The Board's report and any annexures thereto shall be signed by its chairperson of the company if he is authorized by the Board, and where he is not so authorized, shall be signed by at least 2 directors, one of whom shall be a managing director, or by the director where there is 1 director. Contravention, Section 134(8). If a company contravenes any provisions of this section, the company shall be punishable with fine which shall not be less than 50,000 rupees but which may extend to 25 lakh rupees. Every officer of the company who is in default shall be punishable with imprisonment for a term which may extend to 3 years, or fine which shall not be less than 50,000 rupees but which may extend to 5 lakh rupees, or both with imprisonment and fine. Special requirements of company audit. Verification of the constitution and powers. It is essential that the auditor, prior to starting the audit of a company, shall examine the Memorandum of Association, the Articles of Association, contracts entered into with vendors and other persons relating to purchase of property, payment of commission, etc. The auditor should make sure that the company has not entered any contract before it has been registered. In case of public company, the auditor should ensure that the business was not commenced before the certificate of commencement of business has been granted to it by the Registrar of Companies. Section 179 specifies various types of decisions that can be taken by way of resolution by the Board of Directors only in board's meetings, namely, to make calls on shareholders in respect of money unpaid on their shares, to authorize buyback of securities under Section 68, to issue securities including debentures whether in or outside India, to borrow monies, to invest the funds of the company, to grant loans or give guarantee or provide security in respect of loans, to approve financial statement and the board's report, to diversify the business of the company, to approve amalgamation, merger or reconstruction, to take over a company or acquire a controlling or substantial stake in another company, any other matter which may be prescribed. Some of the functions carried out by the board are as follows. Adopting of accounts before the same submitted to the auditor for their report, appointment of the first auditors and filling of casual vacancy, etc. Some matters can only be sanctioned by shareholders like appointment of auditor in AGM, fixing the remuneration of the auditor in AGM, declaration of dividend, etc. Special considerations involved in the examination of certain documents. Memorandum of Association. It is a charter containing particulars of business activities that the company can undertake and the powers it can exercise in regard thereto. Only after examining MOA can an auditor decide if any transaction entered by a company is intra-vires, that is, the company is authorized to enter into it. If a company enters into a transaction which is ultra-vires, the shareholders, though entitled to claim the profit arising on such a transaction, may restrain the management from charging the loss, if any, has been suffered thereon to the company. If the auditor fails to detect and report the transactions which are ultra-vires the company, he would be guilty of negligence. Articles of Association. The Articles of Association define the company's purpose and lay out how tasks are to be accomplished within the organization, including the process for appointing directors and how financial records will be handled. The auditor should study the articles and include extracts from them in his permanent audit file. The auditor who fails to take note of the provisions in the articles in the verification of statements of accounts would be guilty of professional negligence. The auditor must therefore acquaint himself with the provision of the articles of the company and should apply this knowledge in the verification of the transactions of the company. Prospectus. It is a formal document which a company must issue before it makes the allotment of shares. The auditor should study carefully all the conditions and stipulations made in the prospectus and in case any of them has not been carried out, to draw the attention of shareholders thereto. The right to claim refund in case of non-compliance of terms and conditions in prospectus is restricted to such of the shareholders who subscribed for shares on the basis of prospectus.